Ladies and gentlemen, welcome back. I'm the Diamond Hands Prodigy, otherwise known as the one and only. I hope everyone has been having some successful trades. I hope everyone has been keeping up with the financial news. Just last week, we had Papa Powell come out and raise interest rates by 25 basis points, or in other words, 0.25%. But then I go ahead and ask myself, what in the heck is 0.25% interest rate hike gonna do to tame inflation where it's treading upwards of 8% now? This inflation is starting to really get out of control, and the war with Russia is not helping a single bit. So that's what happened last week. And immediately after that announcement, after Jerome Poo came out and raised interest rates, the following 8 or 9 days after that, it has just been rally after rally, and the bulls have been on complete fire. So the big question is, are the bulls back in control, and are we gonna see all-time highs here very soon leading into the summer? Or was this all just a massive bull trap and we're headed right down to crash through support and have some new lower lows? It's anyone's guess, but here on the channel, I will eventually start incorporating some technical analysis. I do want to apologize. I know that I've been very busy. I haven't posted here on this channel as much just because I've been so busy over on my tech channel, the one and only. And by the way, if you haven't subscribed to that channel yet, you probably should. I'm gonna attach a card at the top right and also have a subscribe link down below. Okay, so aside from that, there wasn't a lot of financial news. Once again, the bulls are really testing the bears right now. And currently it seems like it's a big battle of the bulls and the bears. However, some of the trend lines are now starting to break, especially on the 1 hour and 2 hour time frames for those that do technical analysis. So we are in fact due for a pullback. How heavy that is anyone's guess. Are we going to crash through support and find some new lower lows? Maybe. Could we blast off and hit to new all-time highs? Probably not. I think that's very unlikely, especially given that some stocks like Apple and Tesla have now had about 8 or 9 consecutive green days. So now, what you guys came here for. This is week 10. We're going to have the portfolio update. Now, I remember last time I saw you guys was when the portfolio was down bad. It was getting massacred. It was being taken out behind the barn to be shot. But here it is, guys. We have since recovered. We're at about $6,500. We're still a ways away to break even, but depending on how the market goes, I have now hedged myself on my portfolio with a few puts now as well, so that if we do in fact skyrocket even higher this summer, I have mostly bullish plays. Right now it's probably about a 70-30 split. I figured having some bearish plays on the portfolio would really help it out a lot. That way we hedge in the event that the stock market just crumbles and collapses like it did a couple weeks ago, and we're not terrified when we see some atrocious profit and loss, unrealized that is, but it's just very scary to see your portfolio down that much. So on March 14th, our portfolio was down all the way to $4,300. That's when the bear was in full force. But once again, guys, we have recovered and we're doing decent right now. So this is what we have going on right now. I have a snowflake position that does expire next week on January the 1st. And right now it is out of the money. So we have 5 more trading days next week for snowflake to be under $220. If so, we have the possibility to roll that out or just allow it to expire worthless. And I'm looking at this time frame right here, April 22nd for 220. Right now it goes for about $1,400. So if this contract were to expire worthless by next week, we can expect to collect a credit of, around there, about 1,400, probably a little less, just depending, or more, just depending on where the stock price is. So we have that one short call. Our leaps on snow is doing phenomenally well. It's up 44%. We're up $1,300. And that's what I'm talking about, guys. When you have big dips, that's a great opportunity for you to adjust your leaps. It's kind of sort of in a weird way like buying the dips except on steroids, because now you're making your leaps a little stronger. So that's a pro tip for you guys out there. Whenever there is just blood in the streets and Wall Street is just sell, and stocks are being battered, instead of buying the dip, if you already have some leaps options, what would be more beneficial is just to roll down that strike a little more, because at that point it would be a little cheaper to roll it down, whereas in the middle of a bull rally, when leaps and options and calls in general are just very expensive. So that's what we did here. Once again, once we had the big collapse after earnings, it did tank, but it was right here, boom. But at its lowest, this specific contract was at about $2,300. which was, I didn't buy this at the very low, but it was close to it. But it has since recovered a decent amount, and now we're up about 44%. Facebook has been another runner. We've been doing very good on this Facebook play that I placed on the 3rd of March. So we're up a good 50%. I might consider just selling this one because inevitably I feel like there's gonna have to be a pullback in Meta. I don't know. It's got about 23 deltas right now. So in a roundabout way, one can say that it's the equivalent of controlling about 23 shares of Facebook. I did also buy some puts though, and that's what I was talking to you guys about. It's time that, I have to start hedging on Robinhood. I do it like a pro over on Charles Schwab on every play. So if I buy a put, I also buy some calls, right? And here's the reasoning. If you're buying a put, then your assumption is that you have a bearish bias on the stock. So in other words, you want that stock to go down in value so that your put appreciates in value and you can sell it for a higher amount later on. Making sense? Well, what happens if you were completely flat out wrong and instead of the underlying stock going down, it rises in value? Then your put is absolutely gonna get demolished, especially if it's a tri-weekly or a bi-weekly put that you purchased. God forbid if you did a 1 or 2 day DTE. Please don't ever do those. But by having those shares, you protect yourself so that even if your put does crumble and it just expires worthless, at least your stock appreciated in value and you can sell that stock to kind of, make the blow a little softer, if you will, to add a little bit of cushion. And I mean, if the stock does go down, then your put was great and you can sell it for a higher price. And the best thing about shares is so long as you hold on to them, there's no time value attached to shares. So there's no theta that's burning every day and you're just losing money. Instead, just hold that share. And because the stock market has an upwards bias anyway, eventually, if it's a solid company, over the long run, it's bound to come right back up and then you'll be able to sell for a profit. So just a little tip there. Okay, so we're not done. We also have Roku, which I want to say Roku is down. Yes, this one right here. Roku did have a big rally just recently. And so, but I'm okay. Roku, I'm going to roll that one down anyway. And we also have some ZOM puts. This is on ExxonMobil. And I'm going to keep averaging down, guys, because look, I am being very patient with this one. This is textbook. What's going to happen on ZOM here is right now that peak, this bull rally that's going, it's not going to hit the past high for March 8th. It's going to be a little bit under it and people are going to take profits and boom, it's going to be somewhat of a double top scenario. Just mark my words. I'm going to keep averaging up on more puts as I go along the way because for $50, as a matter of fact, I might as well go ahead and buy one on camera. Here we go. So just to show you guys how confident I am that ZOM is going to crash pretty soon once all of this oil and hopefully this Russia stuff get sorted out. Now, am I being an optimist? Yes, I understand that on average, wars take like 9 months or so to come to a ceasefire. The war has only been raging right now for about a month or so, even though it feels like it's been a lot longer. But this isn't gonna last forever, guys. So this recession, as a matter of fact, the 10 and the 2-year bond yields are about to invert. I know, it's crazy. So historically, this indicator has 100% accurately predicted recessions when that ratio inverts, and we are set to invert pretty soon. So rest assured that a recession is most likely imminent. Oh, also earlier today, Bitcoin did rally a lot. So our small, very tiny Bitcoin position is up 8%, which is about $15. So that's not bad. And the rest of our stocks, we're gonna go through them really quickly. Up about 0.5% on Coca-Cola. SPY is up about 2%. DraftKings, we're down about 8%. On IIPR, we're up about 7% on our 2 shares, which is pretty nice. Apple, let's see how we're doing. We're up about 7% on those shares, making about $50 profit there. Not bad. On IWM, we're still only down 1%. But if you guys do recall, I've been dollar cost averaging into the Russell because at one point we were really down bad on this one. I want to say that we were down close to 20%. So that's the magic of just being patient and dollar cost averaging. And finally, we have IJR, and this one is up 1%, so about $7. All right, guys, that's been the recap for week 10. Once again, I wanted to make this one fairly quickly since I still have a ton of other tech content I have to get to. Namely, I have this guy right here that I have to review on my tech channel next week. This is the new iPhone SE that was released just last week or two. So again, if you're interested in tech, go ahead and subscribe to my tech channel. And guys, I will make sure to not skip another week. I will see you guys next week for week 11. Stay safe out there, guys, and I cannot wait to catch you all in the next one.